How can a buyer reduce the mortgage insurance premium that they have to pay on their mortgage? Well, first, let's talk about what MI or mortgage insurance is. Remember, this is the insurance that a lender requires a buyer cover so that they don't have to put 20% down. So, on a conventional loan product, if you are not putting 20% down, then the lender says, okay, we'll let you go to 95 or 97% in some cases, but you have to have insurance that covers the difference between the 80 and whatever the actual loan to value is that they buy. And that is called mortgage insurance. In the situation of conventional loans, there's lots of different MI companies, and the rates for your mortgage insurance is very similar to anything else that you shop for. It is based on different factors. So if you are going to buy a home and you have some money to put down, let's just say you have some, but maybe not a full 20%. Know that the more you put down in increments of 5% will help that mortgage insurance premium rate. So it will reduce the more you put down, which makes sense because remember, you're insuring the amount over 80%. So if you're only going to 90%, we only have to have insurance for 10%. If you're going to 95, that's 15%. It's a little bit more. And I know you're going to be shocked by this in the mortgage world, but also that credit score also impacts what the MI rate will be. Sometimes weird things impact MI, like whether or not there's a co-borrower on the loan or what the debt ratio is. So there are some other factors, but the primary factor is what is the loan to value and what is the credit score. So those two things you might have some control over as a buyer, and you can reduce your monthly payment and reduce that MI. I mean, MI is basically just throwing money at the lender to make sure you don't default. It's wonderful because you don't have to put down 20%, which is fantastic because most of my buyers don't have 20%, especially the first time they buy a house. But if we could reduce that MI rate, that would make homes more affordable and put you in a better place. Now, something that we're not going to get into heavily in this video, but I will in the next one, is the difference in conventional MI, which is privately held MI, and your government loans, which have government-held mortgage insurance. They are set the same for every single buyer. We'll jump into that on the next episode, but for right now, if you would like to give this information on MI, on PMI, private mortgage insurance, remember, first of all, just go make the video. If you know this information, you're a lender and you already know it, how about you go make that video and put it in your own voice? Great idea. Or if you are a little bit nervous or you're a realtor and you're not sure exactly everything I just said and you want a little prompting, go check out rechargingwithchampions.com. Here is where I'm going to have a scripts area. In the members area, it says scripts, and you will see so many different scripts, including this one, that you can use on your own social media. Go be the guru. Share the information with those people that follow you on your social platform. The bottom line is they need to hear from you. They don't need to hear from me. They need to hear from you. So go make your own video in your own voice and connect with them today. Good luck, and we'll see you next time.